which I think is just putting in writing what we've kind of already decided, but we've never explicitly put it down. Kind of our brand, like, primary sources, data driven, specifics. You would want to be humble. Humility, I think, should be part of our brand. Just we're not going to try to pretend to know something that we don't. Kind of being
I think
honest
the other
and
piece,
authentic. Mm-hmm.
I don't think that we've talked about as much. Maybe it's a little bit authentic. Like the other angle that I also like the storytelling component. There's so much chaos. I enjoy watching the interviews, seeing where people are coming from, thinking about these politicians and officials as, just as people. They're going through it as well, and you see how they react. And Trump as a person is on camera like hours every day. So you really know what's going on with them. It's one of the things I was going to talk about on this episode, talk about Fed independence, but I was going to do my best to weave the story about what happened over the past week, why it cropped up, why it fizzled out quickly, and contextualize it in regards to all of these other big decisions that he's been making recently. I'm going to kind of close with the point that he was kind of forced to back down on the Liberation Day stuff a week later. And for the same reason, but from a different source, he was forced to back down from the Powell stuff as well.
No, I'm looking forward to it. That should be good. I might be asking some questions. Personally, for me, what I find to be interesting, and I think another thing that we have a unique ability to provide to the audience, is what the finance world's perspective is, or how they're kind of understanding and thinking about things.
Right.
And that's not always obvious. I kind of think about if I could watch a podcast in which two lawyers kind of spoke about the legal world, I think that would be pretty compelling. Mm-hmm. How do they talk about things? How do they think about what's important to them? What is top of mind? What is not important to them? Same thing with doctor or any profession. I was kind of thinking back to kind of who our audience is, and it's going to be smart, non-finance people who want to be more broadly informed, and just kind of be given the tools. So that could be kind of an understanding of financial concepts, context as to why something is important, like to us for finance, to follow finance and economic news, and to hold. Maybe we can give them the tools and ability to hold an informed conversation, maybe with a group of finance guys they see at a party or something. So for this episode, I would be really interested to hear kind of what your take is when Trump says or does something. What's the first thing you think?
So I'm going to go through what Kevin Hasset said Trump's point of view is with regards to the Fed and why he's upset. He basically lays it out in a very methodical way. One of the points he makes is the Fed cut rates right ahead of the election. But that was our second episode, actually. I was basically describing it as if it was a very reasonable thing to do. Whereas on the other side, they're like, why are they doing this?
Interesting. But that is an interesting take. We can also you're talking about stories. We can talk about stories about people in high positions. But I was going to say it could also be the story about us and how our views change. I think you mentioned something earlier I thought was really interesting, was how you're starting to move away personally from the kind of Trump tariff stuff. Originally, you were all for it, and now you're starting to really get into the pain part. And we're not even, this is just the financial economy.
Yeah, I mean, purely from a finance perspective, let's just say I was more on board with his views and policies than I was with Kamala Harris's views. Up until this point, trying to take an optimistic view on the world. He's at this point given too many reasons to not be optimistic, at least over the short, even the medium term, maybe even the long term, which is what I'm getting a little afraid of. And that's something else that I was going to close with.
Good preview. Sorry to derail us. All right, dude. I'm sure you get that was a lot of chit chat that I'm sure you can get a good cold thing going.
All right. Anyway,
let's get it.
Fed independence. That's what I wanted to talk about today. Maybe even a little bit late at this point because it kind of came and went as soon as it began. But about a week ago now, Trump was back in the headlines as he tends to be. And this time it was because he has been not very happy with Powell. April 17th, the ECB had their monetary policy meeting and they decided to cut rates again. The Fed and the ECB both began their rate cutting cycle around mid last year, so around a similar time. But the difference is that the ECB has continued the whole time. They've cut every meeting since then. But in contrast, the Fed, so last year, starting in September, They cut 3 times consecutively, and then by the end of the year, they decided to pause in the December meeting. And so that's where they've been ever since. So when the ECB comes out and cuts rates, Trump is not so happy. The ECB is expected to cut interest rates for the 7th time, and yet, too late, Jerome Powell, who's always too late and wrong, yesterday issued a report which was another typical and complete mess. Oil prices are down, groceries are down, USA getting rich on tariffs. Too late, should have lowered interest rates like the ECB long ago, but he should certainly lower them now. Powell's termination cannot come fast enough. So it was that last line that really started to get people shook up. Decide for yourself. In this messaging here, he didn't say, I'm going to fire Mr. Too Late. He just said his termination cannot come fast enough. So does that mean till the end of his term or till he has the opportunity to terminate him? Later in the day, he had a meeting with Italian Prime Minister, and during some of the reporter Q&A session, people came out pretty directly about that post that he made.
On Jerome Powell, you said that the termination of Jerome Powell cannot come fast enough. He says he won't leave even if you ask him to.
Oh, he'll leave. If I ask him to, he'll be out of there. But I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast, believe me. Yeah, go ahead. Go ahead, please. Question.
Are you trying to remove him, Mr. President?
Yeah, question.
So clearly he came out swinging on that even more. So people were upset and he just doubled down on it. I don't know if you caught it at the end there. Whenever that question finished, someone else started yelling a question saying like, oh, are you going to remove Powell? And he paused and then he said like, question, next question. And then someone else said the same question. And then he said this next question, please. So he came out hard on, he wanted to talk about it, but then he just completely ignored 2 questions about it. So right off the bat here, he's coming off very strong, but also like almost a little bit unsure.
I see what you mean.
He said something that shook people up and then later that day really doubled down on it. On the following day, his director of the National Economic Council, Kevin Hasset, he took questions from reporters, and Powell thing was very obviously top of mind.
And going off of my colleague's question, do you think firing Jay Powell is an option now in a way that it wasn't before?
The president and his team will continue to study on that.
But what exactly do you think would happen in the market?
So the comment he made, that was the next news-making event. He said the president and his team will continue to study that matter. Very vague, but seems to be clearly implying something that they want to do. Financial markets in general were very upset at that.
Can I ask something? When you say that financial markets were very upset at that, what does that mean to you? How do you decide that? Is it just that it goes down, or do you have other channels, and what do they look like?
It's the idea of bond vigilantism. I don't know how familiar you might be with that term. I don't think it's really a household name or anything. To summarize, it's the idea that whenever individuals want to borrow money, they go to someone that has money, like a bank. And, the bank decides whether or not to loan you money based on your credit worthiness. The same thing happens with governments, but they borrow money from anyone in the world that's willing to take on their debt, that's willing to buy U.S. Treasury bonds. And so over time, the Treasury market's huge. A lot of people are holding a lot of Treasury bonds. And so all of a sudden, if the government does something that people think is becoming too fiscally reckless, is a, kind of a strong way of putting it. But if they think that the government's issuing too much debt, basically kind of almost printing money without any way of backing it up, like to fund it naturally with taxes or, any spending cutbacks or anything like that, people will start to lose faith. So when people think that way, they don't feel safe in those bonds, so they sell the bonds. By a function of selling these bonds, and if it happens on a large enough scale, the yield on those bonds are going to rise. And like we talked about before, the U.S. Treasury market, the interest rates on those underpin a absolutely tremendous number of other interest rates throughout all of the U.S. economy and even other economies that don't even have any implicit connection to the US, but everyone uses these treasury yield rates. So really, it's if holders of the debt, it's basically just them selling it. And so you see that by rising yields.
So that's the short of it. Bond vigilantism, you said. So they're kind of trying to like punish the issuer of the debt, the U.S. government, by selling it. And they sell it enough, yields will go up. Got it. So when you say that, yeah, the markets went a little crazy, it just means you saw a big spike in yields on treasuries because they're dumping their stuff. Got it. Interesting.
This is what we talked about in January over in the UK. So people thought the same thing. People were getting a little bit jumpy, or as Trump said, people were getting a little bit yippy. And so the government had to walk some things back. In January, they more or less effectively did that to kind of, stop the bleeding. By bleeding, I mean, again, these very rapid rises in yields. But in contrast, in 2022 in the UK, this very idea is what forced out Liz Truss within like 40 days or something of her term as prime minister. So people as in anyone who buys and sells UK government debt, they lost faith in her. Yields rose very sharply, very quickly, and she was basically forced out.
Wow.
So the idea of bond vigilantism. So I think a slightly more common version is like you see like activist investors. So if someone is a very large holder of the equity in a company, and even if they don't work for the company, if they're not on the board, if they don't have any formal say in the management of the company, they can kind of force the board to do what they want by just selling all of that equity. And so that's going to cause the price of that equity to go down. It's going to hurt that company. Then the board or the CEO or whoever is incentivized to then work with that individual who is the large equity holder. So
Got it.
whoever holds the purse strings, if they turn on you, things are going to get ugly.
It's kind of a new take on that phrase, money talks.
But back to Kevin Hasset for just a moment. The other reason why I like this interview is because he also then goes on to outline the reasons in which Trump is so upset with the Fed.
What I'd like to do is just think of the policy rather than the personalities. And the policy of this Federal Reserve was to raise rates the minute President Trump was elected last time, to say that the supply-side tax cuts were going to be inflationary, even though supply-side tax cuts could get growth without inflation, to not go out there on TV and at IMF meetings and warn about the terrible inflation from the obvious runaway spending from Joe Biden. And the obvious runaway spending from Joe Biden was textbook inflationary, and we didn't see anybody warning about that. And then they cut rates right ahead of the election. And so if you think that it's unacceptable for President Trump to be frustrated with the policy history of the Fed.
Wow. That was an interesting clip. Yeah, thanks for showing that.
Basically just said Trump has the right to be upset with the Fed. Now, he didn't say directly in that he's going to take action and fire it. But I think he made, a couple of compelling points. So if you just think about it from Trump's perspective, Trump's administration, his policy goals perspective. So one of the things that Kevin Hasset said there was that the Fed began raising rates as soon as Trump got elected the first time. That actually is true. I just went back just to make sure. And in December 2016, I believe, at that meeting, the Fed did raise rates for the second time of that rate hiking cycle. So to be fair, they had already begun that rate hiking cycle. And from the perspective of, someone purely in finance trying to stay away from politics, there's a lot of good reasons, a lot of arguments that could be made as to why raising rates at that time was the right thing to do. But Trump sees it as soon as I'm entering office, they don't like me. They're going to raise rates to try to hurt me. And then 4 years later, after COVID, astronomical spending from both the Fed and the government at the same time. And he said, why was no one warning about this? Why didn't Jay Powell get on TV go to the IMF and warn everyone about this? This was textbook inflationary, he said. And hindsight's 2020. It does look very obviously textbook inflationary. But also at the time, I remember hearing all of this commentary about it, the Fed's whole idea of this inflation is going to be transitory. We were coming off of an era post 2008 where we were really deflation fighters. In the US, we watched deflation cripple Japan for decades before that. Then we had just suffered the largest recession since the Great Depression, and policymakers were very laser focused on not falling into deflation. So, if anything, from 2008 until 2021, the issue was inflation too low, not being too high. So that was really the backdrop there. So I think at the time, it was a lot easier to make the argument that we're in this kind of new macroeconomic world where our previous models don't work. But we saw that it kind of did snap back eventually.
That's interesting. That's your take. I had a slightly different one. The point about the raising rates right after entering office, that one didn't really resonate with me. I think that was just a coincidence. But when he compared the messaging around the two different potentially inflationary messages, that got me thinking a little bit more. So, and he said, when, such a stimulus package that came after the COVID is obviously textbook inflationary, but there was no messaging talking about, worry about this. And yet, compare that with, I guess, the messaging going around the Trump tariffs and sort of the inflation that's expected to come from that. I don't is that true? Is Powell doing a circuit or something and talking about how we expect these to be inflationary, or was that because so far what we watched on this episode, on these, between us, he seems to just kind of push it off. He doesn't go out and say these are going to be inflationary. He says we're just going to wait for the data. We don't have any definitive policies yet. Is he making a circuit, or are there two distinct messaging that's coming from the Fed?
So Powell himself is not on a circuit necessarily. The way that the Fed manages public communications is that they basically have a rotating cast of those on the FOMC board, as well as the regional bank presidents on an ongoing basis. They make public appearances and give speeches and go to events and Q&As. And so you get this continuous stream of commentary from those on the FOMC. Powell is just one of 13 votes whenever these decisions are made. So everyone else is on this continuous circuit. So the theme back in early 2021 was the transitory theme. This time, Powell mentioned transitory during the previous FOMC meeting that we talked about here. But ever since then, a lot of the other communications, I think near exclusively over the past few weeks, it's been shifting towards saying we're a little concerned it's not going to be a one-off.
Yeah, I think you're right. You're right. I forgot they give speeches. They travel around and give speeches, and then the FRB will publish the speech. And I'm sure they're mentioning a lot about this. I wonder if they link it directly with inflation. But that was my initial take. The other thing I'd add is people thought that the stimulus package that came after 2008 would be inflationary. That's textbook inflation. And they pumped a whole bunch of money into it. And I think even a former professor of mine, Marvin Goodfriend, rest in peace, advocated that it would be inflationary. And guess what? Nothing happened. It was not. And I think that's when so central bankers took a hard look at the Phillips curve, and they kind of looked to see, okay, what is going on? We all would have expected this to be inflationary. It was not. Maybe something else is broken. So when the kind of current stimulus came around this halftime, it wasn't super obvious that it would be inflationary just because we'd already done this before. But I think, that combined with the fact that people weren't producing anymore. Anyway, something else happened.
People thought that, wait a minute, I think maybe our understanding of inflation itself is not quite correct. We saw this in 2008. It was not inflationary. Let's just do it again.
Right. They really think they can get away with it. Yeah, that's right. But now inflation came back and it's top of mind. And now all of a sudden it's a much more sensitive pedal. You push it a little bit and the inflation thing, and people think it might take off. Interesting.
The last point he made was about raising rates right as Trump began his first term, and then cutting rates right before he was elected again. They see that as a political statement, trying to help his political opponent at the time. That's something else that we talked about as it happened here on this show. You can go back and check that out. I give a very long-winded, rambling answer, but the point is that it seemed quite reasonable at the time. So within the context of the inflation fight that was going on at the time, I think in this show, we kind of concluded that it was a pretty reasonable thing to do. I wasn't really thinking about it as, oh, this is political, they're trying to keep Trump out of office or something like that. But obviously, himself and anyone in his cabinet, that's the story that they're going to weave. But just thinking about it from that angle, it's, they're raising rates when he's there, they're cutting rates when he's not. They supported this narrative that could have been critical of Joe Biden, but they chose not to.
The other thing that we got to keep in mind too is usually when like a president is pushing to cut rates, it's the point is the start of an easing cycle. What they're pushing for, maybe they're in a rising rate environment or a steady rate environment, and the president's asking to cut rates. What they really mean is to start the easing cycle. And what doesn't really make sense to me is the fact that we've been in an easing cycle for since September, for like 6 months now. So, the fact that they're trying to like jab him or something by keeping it steady while we're on the way down, I don't know, doesn't really ring true. And he's saying that like the ECB, the European Central Bank, is just cutting kind of more faster, or cutting at a kind of faster clip. It's kind of like a BFD. But really all the central banks are cutting at the moment. We're all in an easing rate cycle. I think the only one maybe it's kind of keeping it flatter is Japan. So the point is we're already in an easing cycle. So for him to be like, oh, it's too late, it's like, well, we've already started.
I would say, though, that rates still are historically really high, and people are getting a little bit nervous about the health of the economy, whether it's related to tariffs or not. And in that kind of environment, the knee-jerk thing to do is to cut rates. So I could definitely see the argument, but at the same time, they were wrong about inflation back in 2021. They want to be really careful not to make the same mistake.
But didn't this guy, Kevin Hasset, just come out and say about how Trump's policies are working, that the growth is good, inflation's going down, the job numbers are better than we thought? So it kind of feels like, can you really have it both ways? It's like, okay, is the economy good or is it bad? And at one side, they want to say it's good, we're doing a great job, at which point it means you don't cut rates. The other point, they're saying cut rates because their policies aren't working. I don't know.
That's exactly right. No, I mean, for sure. He was saying they should cut rates, but then Hassett's giving all the reasons why the economy's in.
Right, they shouldn't. Okay. So it's a man with an agenda. What do you want?
Yeah, I mean, of course.
That's what it sounds like.
Yeah, they're all on the same team. They have to project that message. But I think what we're getting at here is that it's not super obvious one way or the other. You can definitely make an argument to hold or lower at this point.
And I'm sure you're probably going to mention this, but the market is expecting a lot more cuts all of a sudden.
So I wasn't going to talk about this point specifically, but I think compared to pre-Liberation Day, I think they're expecting one more cut than they previously were. All right, back to the story here. The start of Easter weekend, he kind of spared everyone, but then Monday morning, he's right back at it. Preemptive cuts in interest rates are being called by many. I think energy costs down, food prices down, and most other quote unquote things. I wonder what quote things he was talking about there. Most other things trending down. There's virtually no inflation. With these costs trending downward, what I predict they would do, there can almost be no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Europe has already, quote, lowered. Not exactly what he means with that. Did they lower it in a strange way? I'm not sure.
Did they lower it, but not really? Yeah.
Powell has always been, now, quote, too late. Two spelled wrong when it was spelled correctly in the previous
Give
sentence.
him a break, all right? It's 9 a.m. in the morning. Who's actually, come on. How lucid are you at 9:41 a.m.?
He's sitting in the White House watching Fox News, just waking up at this time. I don't blame him.
I got to say, the tone of this podcast, we've turned pretty hard against Trump already just in this episode. We didn't used to make...
I mean, many times
that's true. We've pointed this out.
I think it's just straight up amusing the way that he speaks. And like I've always argued, seeing this kind of stuff, at least it tells us like we're hearing directly from the man himself. This is not a marketing team sending it out. This is him typing out the typos.
That's true. That's fair. I would much, much, much rather have this than like some marketing team. Yeah. Some canned nothing. really nothing.
This is, multiple days now and just more fuel on the fire. He keeps amping it up. Things start to get a little bit yippy again. That was his famous phrase after pausing the Liberation Day tariffs. He said the bond market was getting a little too yippy. So the fundamental idea here is this idea of the bond vigilantism again. It's more or less saying if interest rates get too high, it's going to be very bad for the economy. And people that hold these securities have the power to sell them, basically meaning that they have the power to raise interest rates if enough people do it along with them. With the tariffs, people were concerned about where the economy was going to go with that. They were concerned about erratic behavior out of the administration. And so this was just a perfect example of another way in which he was doing that. Erratic behavior and, crucially, threatening the Fed independence. So if people don't like what he was doing with his trade policy, with his domestic fiscal policy, they're really not going to like it if now he's also elbowing his way in to the Fed. If they think he's in charge of interest rates as well, it's going to give people that were already concerned about the fiscal standing of the U.S., whether due to tariffs or any other things that he does related to politics in office. If he also starts to take over the monetary policy component as well, that could just be another thing for people to run away even faster from U.S. Treasury bonds. That's going to mean interest rates in the U.S. are going to go up. Scott Bessent keeps talking about how he wants a lower 10-year yield. At this point, the 10-year is about where it started when Trump got elected. And so it only has room to go higher from that point if he were to keep doubling down on this messaging about firing Mr. Too Late. There's reports that in the back rooms, his advisors were telling him to back off, Bessent and Howard Lutnick. I don't think there's anything public about that, and he denies it. But it seems pretty clear just looking at this timeline that that's exactly what happened. So this was on Monday. He sent this last Mr. Loser tweet. And then the following day, he's brought back to reality.
Yeah, please.
Yeah, so you have no intention of firing Jerome Powell because here, Evan Ryan Hasset a few days ago said that you and people in the audience were studying this idea possibly before the term ends.
No.
Do you have any plans on doing it?
None whatsoever. Never did. The press runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. It's a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. It could have taken place earlier. But no, I have no intention to fire him.
All right. So to me, that's pretty strong 180 pretty quick.
That's pretty strong 180 pretty quick. Yeah, that's interesting.
Yeah.
Somebody gave him a little talking to.
Someone definitely got to him. Fundamentally, it's bond yields. There was already becoming an issue from Liberation Day. That's ultimately why he went with that 90-day pause to pump the brakes on this. And so in the back rooms, he was definitely, having his advisors were definitely telling him that this is something else you're doing to exacerbate that issue from a totally different angle.
I didn't really respect the power of the bond market. Everyone talks about the stock market, but it sounds like the bond market has got some heavyweights in there too. I'm the commercial banker. This is the investment banker talking over there. Don't have quite a view into it. This is interesting.
Bloomberg actually just earlier today released a pretty interesting little explainer video talking about this exact topic. So this is called How Bond Vigilantes Made Trump Blink. We could watch this whole thing here, but we'll just link this below. First explains what bond vigilantism is. It gives a little bit of history of how it's evolved over the past few decades, ultimately concluding that it all came back to this. That's what forced Trump's hand, effectively backing off from that initial round of the Liberation Day tariffs. It was a pause, but he effectively was forced to stand down by the bond market. And there's been many times in history where this has happened over the past few decades. I think the term itself is pretty new to like the early 90s or so, but it's definitely pretty powerful.
Yeah, respect the bond market.
Yields or interest rates demanded by investors to buy government debt.
Yields on 10-year US Treasuries skyrocketed 49 basis points in 1 week. That's the most in more than 2 decades.
The last time being here in 2001, during a recession that followed the dot-com bubble. The bond market had assessed Trump's tariffs and responded with a message.
We're not sure we're safe leaving our money in the US anymore.
Now, neither trillions of dollars of lost value in equity markets nor the chorus of alarm from world leaders had changed Trump's mind. But angry bond investors...
I was watching the bond market. The bond market is very tricky. I was watching it.
That's what got him to press pause on his tariffs.
Which is very reminiscent of what happened in the early 1990s when President Clinton's advisors warned him that he has to kiss the ring of the bond vigilantes.
So who are these bond vigilantes?
Anyway, I won't watch the whole thing here, but
it's a good title for the episode. Respect the bond market.
But yeah, so that's the story pretty much. He came out strong, but like in the course of just a couple of weeks, he was forced into doing something twice now. You know, arguably the second one, he wasn't really doing anything in the first place, but he likes his media campaigns. He likes making fun of people. He did a really stark 180 on that one. And I think it's all because of the bond markets. So he has backed off, but we're definitely not out of the woods just yet.
In terms of long-term implications of what this could mean for the Trump administration, if they do not address some of the key concerns by bond investors, expect yields to spike.
The really long-term risk for Trump is that trust has already been damaged. If people no longer trust the US to be a reasonable, good faith interlocutor, it's going to be very hard to get that back.
So I think that was a good way of summing it up. I would be very surprised if we don't keep hearing about this term over the coming years here, especially if he continues with such aggressive policies that are outside of the norm. He doesn't listen to people, but he's forced to listen to the bond markets. He has been so far. We'll see if that continues.
Interesting stuff. All right. Well, thanks for tuning in. We'll see you next week. I'm Luke.
I'm Joe. Thanks for watching the Root of All Evil podcast.
Take care.
See you next time.